Welcome to the deep dive. Today, we're going to dive deep into the really dynamic world of cryptocurrency price predictions. Our mission, basically, is to unpack what experts are saying right now about two specific altcoins. There's the established one, Chainlink, or LNK, and then a newer project called Remittix, RTX. We want to explore what's really driving their value, how these predictions actually get made, and, what surprising things the sources are telling us.
Yeah, and we've got some great source material for this. We're looking at recent articles, reports from financial news outlets, crypto analytics platforms too. So it's a really interesting mix. We get near-term outlooks, but also some much longer-term forecasts for these digital assets.
Okay, so before we jump right into LNK and RTX, maybe we should lay some groundwork. Like, when we talk about crypto prices moving, what are the fundamental forces actually influencing things? It's not just pure guesswork, right?
No, absolutely not. I mean, crypto's known for volatility, sure, but there are clear economic drivers, very similar to traditional markets in some ways. NAGI, which is a global trading platform, points out several key things. First, and maybe the most basic, is supply and demand.
Right.
Unlike regular currencies, lots of cryptos have a limited supply. Bitcoin's 21 million cap is the famous example. So when you have that fixed, or maybe even decreasing supply meeting growing demand, prices tend to go up, sometimes pretty fast.
Makes sense.
Second is market sentiment. And this is huge in crypto, really huge. News, what's trending on social media, just the general public vibe, it can cause these really sharp swings.
Yeah, you see that all the time.
Exactly. Like positive news, maybe a big partnership gets announced, or regulators give a green light that can kick off a big rally. But negative news, that can cause a real sell-off fast. We even have tools to sort of measure this, like the Fear and Greed Index. For Chainlink, CoinCodex has it at 73 right now. That means greed. So investors are feeling pretty optimistic, you could say.
Interesting. What else?
Then you've got the regulatory environment. Big one. Changes in government policy, legal stuff that can seriously affect prices. Favorable rules, they boost adoption, confidence. Crackdowns, they can cause real panic. Also, technological advancements. Think upgrades, forks, new features that make a blockchain faster, more secure, more scalable.
Right, stuff that makes it actually better.
Exactly. That drives investor interest and, the price. And we can't forget macro trends. The bigger economic picture matters. Inflation rates, global liquidity, how strong, say, the US dollar is. It all has ripple effects in crypto.
Okay.
And finally, something pretty unique to blockchain. On-chain activity. This gives you a real window into how much a network is actually being used. Things like transaction volume, how many active addresses there are, or network hash rate for proof-of-work coins, or how many coins are staked for proof of stake. It shows the network's health.
Okay, so those are the forces. But here's where it gets really interesting for me. How do experts actually try to predict prices in such a, unpredictable market? What methods are they using? It sounds complex.
It is, but there are established approaches. NAGI breaks it down into three main types of analysis. First up is fundamental analysis. This is about looking at everything that affects a market. Global factors, domestic ones, politics, economics, the works. It's generally seen as more useful for long-term predictions, trying to figure out an asset's sort of intrinsic value.
So for crypto, what does that involve? Like the project itself?
Exactly. You dig into the project specifics. Who's the team behind it? What's the white paper say? What are the tokenomics, how the token works? What's their roadmap? How do they compare to competitors? And you also look at those on-chain metrics we just talked about, transactions, active addresses, hash rate, or staking numbers.
Got it. Fundamentals, what's next?
Next is technical analysis. This is quite different. It's all about studying statistical trends from market activity. So looking at historical price movements, chart patterns, trading volumes. The idea is that prices move in trends and history tends to, repeat itself.
And this is more for short-term stuff?
Generally, yeah. People use it for shorter-term predictions. You'll hear about things like moving averages, the 50-day, the 200-day SMA or EMA, or indicators like the RSI, the Relative Strength Index, even specific candlestick patterns on charts, like a bullish engulfing, which some traders see as a buy signal.
Okay, technicals. And the third one?
The third is sentiment analysis. This one's about gauging the collective mood, the emotions and attitudes of investors towards an asset. You can often see it reflected in trading metrics, but also, crucially, in crypto and social media chatter. It's kind of a psychological assessment.
Like the Fear and Greed Index you mentioned earlier.
That's part of it, yeah. But it's broader, too. And it can really impact market cycles. I mean, think about Elon Musk's tweets and how they moved Bitcoin and Dogecoin. That's sentiment in action, a very visible example.
Right. Okay, that framework helps a lot. So Let's apply this. Let's talk about Chainlink, L-I-N-K. It's a big name. Analysts mention it constantly. Where does it stand right now, and what's giving it momentum?
Yeah, Chainlink is definitely a major player. Our sources confirm that. It's consistently a top 15 crypto by market cap. Disruption Banking puts its market cap around $10.44 billion, ranking it 11th on CoinMarketCap. Trading volume is often over $400 million a day. And the supply is 657 million LINK circulating out of a total cap of 1 billion.
And the price, where's it sitting?
It's been hovering sort of in the high teens. Coin Central says high $18 to around $19. Yeah. CoinCodex has it at $17.74. CoinGape at $17.92. So right in that ballpark.
How's its recent performance been?
A bit of a mixed bag, honestly, which really shows that crypto volatility. Disruption Banking noted a 9.5% jump in the past week, but looking back a bit further is down about 13.4% over the month and actually down 23% year to date as of late March 2025.
Okay, so what are the underlying drivers then? What's the positive case people are making?
Well, the catalysts are pretty compelling. Its role in DeFi, decentralized finance, and also this emerging area of real-world assets, or RWAs, is key. Some call it the network of networks. Basically, it's this vital link between smart contracts on blockchains and real-world data feeds. That enables a lot.
Like making smart contracts actually useful for real-world stuff.
Exactly. And the scale is huge. It's now enabled over $20 trillion in transaction value. That's up from $7 trillion just 2 years back. Massive growth.
Wow.
Then there's institutional integration. Its cross-chain protocol, CCIP, is getting picked up. Falcon Finance just added it, for example. It supports major blockchains, Ethereum, Arbitrum, Avalanche, which really helps boost cross-chain transactions. Chainlink's even involved in central bank pilots, like in Brazil with their Drex pilot for CBDCs. They did a partnership there with Banco Inter, Microsoft Brazil, and 7scom late last year.
So moving beyond just crypto-native stuff into traditional finance, too.
Very much so. These TradFi alliances are a big deal. The collaboration with SWIFT, the global banking network through Singapore's Project Guardian, that's huge. It allows tokenized fund settlements across like 11,500 financial institutions. Plus, they're working with BX Digital and BX Swiss to bring Swiss stock data onto the blockchain. That was just this January.
Okay, so real-world connections are building. Anything else driving interest?
Yeah, for token holders, there's the staking program. Version 0.2 is open now. It offers about a 4.75% annual yield. That attracts long-term holders, and the pool's already got 45 million LINK in it. And just generally, its market dominance is impressive. Over 80% of the Oracle market share, more than 1,500 partnerships. They're the big fish in that pond.
Seems like a lot going for it. But even big fish face challenges, right? What are the risks or headwinds for Chainlink?
You're absolutely right. There are definite risks in competition. While Chainlink has a big lead, it's not alone. You got competitors like Band Protocol, UMA, API3, DIA, PIF Network. They're all trying to chip away. Now, Chainlink's volume is way higher, like $18 trillion enabled in 2024 versus maybe $1 trillion for PIF, but the competition is there.
And regulatory risks.
Yeah, that's a factor too. Costs are rising. Estimates suggest regulatory compliance could eat up maybe 15% of operational budgets by 2026. And there's talk about the EU's MiCA rules potentially getting amended next year to cap Oracle fees, which could, impact revenue streams.
Okay, so keeping those risks in mind, what are the actual price predictions? You mentioned different sources earlier.
Right, and this is where it gets really interesting and maybe a bit confusing. The predictions vary a lot. Coin Central, looking at the charts, sees targets around $22 and $28 if the price stays bullish above that $18, $19 level.
Okay, bullish short-term technical view.
Then you have CoinCodex. They're currently at $17.74, but they predict a rise to nearly $19 by late August 2025. Their average for 2025 is around $22.27, maybe hitting 27, 26 cents. And long term, they're extremely bullish.
How bullish?
Like potential high of $65.40 by 2030. And get this, up to $163.69 by 2050. They even pinpoint hitting $120 around June 2042. Their overall sentiment gauge is bullish. That fear and greed index is at 73, indicating greed.
Wow. Okay, $163 is a huge number. What about other sources? Do they agree?
Well, here's the contrast. CoinGape, currently seeing the price around $17.92, has a very different take for 2025. They predict a range between just $17.04 and $17.78 for the whole year, averaging $17.42.
Increase. How much?
Down to a maximum of just $1.58 by 2050.
Wait, one says $163, the other says $1.58 by 2050.
Exactly. A massive difference. CoinGape's sentiment is rated mixed.
Wild. Are there any others in the mix?
Yeah, FX Street cites some analysts looking for a climb above $18 soon, testing resistance at $22 to $28 by August. Potential higher targets maybe $31, even $50. And Disruption Banking mentions CoinGape's $15.89, $18.99 range for the end of 2025, and another exchange, Changelly, projecting $15.71, $19.31. They also note some analysts on X, Twitter, are forecasting $18.22 if things turn bullish.
So, okay. We have predictions for maybe $17 to $28 in the near term, but long-term views that range from over $160 down to barely over $1. What does that even mean? How should someone make sense of such completely different outlooks?
Yeah, you've hit on probably the most crucial takeaway when looking at crypto forecasts. It's often surprising, especially if you're new to this space. This huge difference isn't just a minor disagreement. It tells you a lot about how predictions are made. You might have one model, like maybe CoinCodex, is focusing heavily on long-term adoption, network effects, that whole utility argument, leading to a very bullish case.
While another, perhaps CoinGape's, might be weighing short-term technicals more heavily, or maybe potential regulatory hurdles, or just general market cycles, leading to a much more cautious or even bearish view. It really forces you, as an observer or potential investor, to look beyond the final price number.
To look at their assumptions.
Exactly. What methodology are they using? What factors are they prioritizing? What risks are they maybe downplaying or emphasizing? Because at the end of the day, these are forecasts. They're based on current data and specific assumptions about the future, which might or might not play out. They're not guarantees. This massive range reminds us that conviction in crypto really should come from understanding the fundamentals, the tech, the risks, not just chasing a predicted price target.
That's a really important point. Okay, let's shift gears then. Let's talk about the other coin, Remittix, RTX. It's getting attention partly because its price is under $1 right now. What makes it stand out? What's its story?
Remittix, it offers a pretty different value proposition compared to something like Chainlink. Sources like Coin Central and FX Street describe it as a utility play. It's a cross-chain DeFi project, but its main focus is on making crypto transfers simple and cheap, really targeting actual usage, practical applications.
Less about hype, more about doing something useful.
That seems to be the angle,
Yeah.
rather than just trying to go viral. And they seem to be building seriously. They've given a concrete date for their wallet beta launch, September 15th, 2025. Having a specific product deadline like that adds credibility.
And funding. Has it attracted investment?
It has. Apparently, it's already raised $18 million. And they're close to hitting their soft cap goal for funding. That suggests, decent early belief from investors in what they're trying to build.
What about security and features?
Security is a big selling point. It's CertiK audited. CertiK's a well-known blockchain security firm, so passing their audit gives a level of confidence about the code's safety and transparency. Feature-wise, the protocol supports staking, other cross-chain DeFi functions, and APIs for businesses. And the upcoming wallet is aiming to be mobile first, including real-time FX conversion. They're clearly targeting global use, trying to be part of what they call the future of PayFi or payment finance.
How are they building community?
They seem pretty active there, using rewards for referrals, encouraging early participation, and they've got a live $250,000 giveaway running. Standard tactics to build buzz and engagement early on, and you definitely see it popping up on those kinds of watch lists like top cryptos under $1, new altcoins to watch, should I buy RTX token, that kind of thing.
Okay, interesting. So Chainlink, the established infrastructure player, and Remittix, the newer utility-focused payments project. Now, what's this I read about analysts suggesting pairing them? That seems kind of like an odd couple. Why put those two together in a strategy?
Yeah, it might seem a bit counterintuitive at first glance, but the analysts talking about this, mentioned in Coin Central and FX Street, are framing it as a barbell strategy.
A barbell, like weights on either end.
Exactly. The idea is you balance two different types of assets. In this case, it's combining Chainlink, representing that core data infrastructure for Web3, with Remittix, representing the payments utility side, trying to make crypto useful for everyday transfers.
So covering different bases.
Right. The thinking is that this pairing captures two potentially major growth areas for 2025. On one end, you have the robust data connectivity from Link, which is fundamental infrastructure. On the other end, you have the potential for widespread, cheap, everyday payments that RTX is aiming for. So it's a way to potentially cover both the big narrative, plays the infrastructure story, and the practical adoption plays the payment story in one allocation.
Okay. I see the logic.
Yeah, the idea is that if overall crypto activity and transaction volumes pick up, say, later this year into Q3 or Q4, then the cheaper, easier user experience from something like RTX could really gain traction, while established players like LNK continue their momentum. It's about capturing growth from different angles.
Interesting strategy. Okay, so as we start to wrap this up, we've covered a lot. The forces driving crypto prices, the different ways analysts try to predict them, and then deep dives into Chainlink and Remittix, including those wildly different forecasts.
We have. And it really leads to, I think, a crucial question for anyone listening. Given how volatile crypto is and seeing how much even the experts can disagree on future prices, what should you really focus on beyond just those price targets when you're evaluating something like Link or RTX for yourself?
Right, what matters besides the potential price?
Maybe think about the actual underlying utility. Does it solve a real problem? How strong is the developer community building on it? And can you see a clear path to practical real-world application? Those might be more telling indicators in the long run.